China's Ministry of Defense recently dropped a chilling one-liner. The day everyone's waiting for won't be far off. This clearly comes across as the threat to Taiwan, paired with Beijing's new ban on importing Nvidia chips. That's not subtle. It's flashing red sign. China's self-sufficiency in semiconductors is way ahead of what many people thought. Who's really hurting America? Ironically, the biggest enablers of China's race in chips aren't just Beijing. It's America's own Wall Street and even Taiwan. Wall Street doubts, industry proof. Just weeks ago, Morgan Stanley claimed that Huawei's new AI chip had only a 5% error rate, calling self-reliance a fantasy. But when insider tore down Huawei's Ascent 910C, they found a 7nm chip rivaling Nvidia's H100, already training massive AI models like DeepSeek. Global supply chain reality, even more ironic. That chip supply chain crossed every supposed red line. Taiwan's TSMC handled fabrication. Samsung and SK Hynix supposed HBM memory, and the scale is already in the millions. The Chinese government is clear a threat to Taiwan. But look at where the money flows. Wall Street keeps pouring billions into Chinese government-backed companies. Everyone knows Alibaba stock is propped up by government subsidies, and its AI progress rests on state support. Maybe US investment banks can make a quick profit in the short run, but let's be honest, that's the same as handling bullies to your opponent. The Alibaba puzzle. Now, let's connect this to Alibaba's stock surge recently. 1. Biggest AI model yet, Qwen 3 Max. Alibaba launched its largest and most powerful AI model to date. Markets see this as a new engine of growth, rivaling OpenAI or Google. 2. Massive AI infrastructure investment. The company pledged nearly $530 billion to data centers, chips, and computer power. 3. Wall Street buys in. Kathleen Wood's ARK ETFs bought $16 million worth of Alibaba stock. JPMorgan raised in stake from 6.8 to 12.3%. To Western investors, this looks like opportunity. But here's the catch. Alibaba's AI boom is powered by heavy government subsidies. It's not free market growth, it's a state-backed strategy. The bigger picture, China's Cold War playbook. Beijing doesn't fear recession, falling birth rates, or shrinking customer demand. Their priority is military tech, parity with the US, even if the economy suffers. It's a strategy more disciplined than the old Soviet Union. The risk no one gets. What American investors often miss is the unpredictability of dictatorship. The party propped up Alibaba today, but could crush it tomorrow. There's no commercial logic, only political survival. Lessons ignored. Buffett dumped BYD, Li Ka-shing pulled out of Hong Kong. Yet Wall Street keeps forgetting its scars, chasing short-term gains in companies like Alibaba or DeepSeek, ignoring how fragile those gains really are. Closing punch. So here's a paradox. Taiwan shouts about defending against China, while its fabs quietly build China's most critical chips. And the United States talk about protecting democracy, while Wall Street pouring billions into firms that fuel Beijing's military edge. In Chinese, there's a saying, a mouse acting as bridesmaid to a cat. That's exactly what it's like. Helping your own predator prepare for the wedding feast. 耗子给猫当伴娘.
To avoid a third world war, and the only way to avoid it is for us to get back the mainland. Otherwise you will have a third world war. Quemoy Island is lost, then it means that it's the beginning of the loss of a whole chain of lands. Taiwan, Philippines, Japan, probably Hawaii in time, and the North American continent. And so you cannot understand how far we are willing to go to defend ourselves. I want to point out again that we don't invade the mainland. We get back what rightfully belongs to China, to the Republic of China. Because what is happening on the mainland is not that that the administration is Chinese. The administration is backed by Russia and is a Russian puppet.